Okay, so MACD, moving average, convergence, divergence line, we figured out what it means, how you actually plot it. Now let's see what kind of indicators it gives us, buy and sell. I think it's the Nifty futures. We're trying to get a signal on that using the MACD doc.
Yeah, that's right. What we will see here is in this particular chart, where I have shown both the 1226 moving average. So first of it is the crossover of the price over the moving average. The second signal is the crossover of the moving average over the moving average, and that is where you will get your MACD signal exceeding the level of 0. See, MACD is the difference between two moving averages, the short term over the long term, and when the short term moves over the long term, that's a signal of an uptrend in the offing. So here we have the MACD moving above 0, and at that point of time you can see these blue lines. The MACD line has crossed its own trigger line much ahead, and the blue line have actually put on some amount of strength. So we have a clear-cut buy signal here, which is confirmed by the moving average signals upwards and as well as the MACD here, and we have this as a very nice signal of a buy, which turned out to be a pretty decent up move, which lasted a fair amount of time and gave us a fair amount of distance in terms of the price as well.
Right, and this works well when there are clear trends. Now, tell me one thing, if you actually see the MACD line, movement of the MACD line is upwards, say, and the actual stock price is moving downwards, that's a sort of divergence. How do you play that?
You see, with respect to all the momentum indicators, MACD is also a momentum indicator. It is using the moving averages to measure momentum. What we look for in a stock is, see, what makes a stock move is really momentum. And what we look for is an exhaustion of momentum. And when we plot it in the form of an oscillator like MACD, we will get these set of phases where the price moves very aggressively like it is moving here. But if you notice the MACD line, it has actually become much weaker and it is hardly above the previous peak. So this is the measure of momentum, and it clearly says to us that the momentum on this rise is running out. This is the state of divergence. It's actually a divergence between what we see on the price plot and what we see on the MACD plot. This divergence is a very, very powerful alert that the up move is about to run out, and that's what we use as a trading signal.
That's a very important point. The other one I wanted to talk about was, which we see every time, is when do these signals not work? MACD once again trending sideways markets, a problem?
Sideways market, everything is a problem, right? We don't have really a solution. We just try to minimize it as much as we can. In the case of the MACD, we use a kind of a reverse logic that, during trended phases, there is never a sell signal, or the signal keeps, it sort of remains there for a long period of time. When the market
and that's also when the blue line, those blue areas just become very frequent, up, down.
Exactly.
That's the zero line that you can see around which you have those neat blue areas.
Yes.
If those areas become smaller and you're just stuck around the zero line,
absolutely,
basically it's a sideways market.
Exactly, and that's how the MACD will give us the signals on both when the market is trending as well as when the market is not trending. So we can suitably readjust our strategies.
And does it need a confirmation, the MACD? Which is the other indicators you would use with it to confirm a buy signal that it might generate?
See, the MACD or most of the oscillators just need price confirmation, in the sense that all oscillators, whether they give you a divergence patterns or otherwise, are alerts. And what we need to do is really combine a price reversal signal, like a break of a trend line, break of a moving average line, etc. We use a price confirmation that the trend has actually turned around. If you want me to use a very colloquial kind of example, you would say, this is to quote Martin Pring, one of the authors, well-known authors. He says that divergence patterns are like dark clouds in the sky. Dark clouds by themselves do not mean rain. It is with the first droplet of rain that you actually get signaled about a rainfall. So the turnaround in the price is like the first droplet of rain. But the MACD line or the RSI or any of the oscillators warn you of inclement weather ahead. And that is the warning we really have to take. But we take evasive action when the rain falls or when the trend changes.
Right. Good example there, and just with the onset of monsoons, couldn't have been more timely. Time for a short break. We'll come back and look at trading discipline and trading strategies.